Good morning, students. See, today in accountancy, we are going to discuss about chapter 3, that means unit 3, books of prime entry. So, in that first one, source document. So, source document means there are certain important documents which can be proved as an evidence of financial transactions. Okay, va? So, those documents are called as source documents. So, for example, cash bill, invoice, debit note, credit note, pay in slip, salary bill, wages, check. So these are all for the examples. Now, one more example which is given in our textbook, there is a specimen of cash voucher. I also has been sent different documents to be collected. That is for assignment number 1. Okay, students. Then after then clearly I will send you a message. Then after then the next important section B is invoice. So invoice means it's like a bill. So what is the difference between a cash bill and an invoice? See, invoice here, there are two parties' name has been mentioned. Then what are the description of the goods we have purchased, and if there is any discount is given, so deduct that balance amount or already we have paid in advance. So full details will be mentioned in the invoice. Then invoice maybe 3 copies can be prepared. The first copy must be given to the purchaser, and the second copy is already be filed and retained by the seller. The next one is debit note. Sometimes when a buyer return the goods to the seller in the various situations, so due to maybe problem in the goods, goods has been damaged and all. So that time the buyer prepares a debit note and sends to the seller. The next one is the credit note. Credit note is prepared by the seller who receives back from his customer the goods has been sold. So here also the description of the goods, the quantity returned and all to be mentioned. The next one is the pay in slip. The pay in slip normally, suppose if your father or mother goes to the bank, means one time you all should go to the bank and then see the transactions, how to deposit money in the bank account, how to withdraw money. So as a commerce student, everyone should know this banking transaction procedure. It is must, students. So first one is pay in slip. So it is related that a type of a form to be filled by a customer and submitted to the banker. The next one is check. So a check is a negotiable instrument. Check also can be issued by a bank to its customer for withdrawing money for their own use. So these are all called as source documents. Are you all understood? Now next we are going double entry system. What do you mean by double entry system? See, double entry system of bookkeeping, it's a complete system of recording the financial transactions of an organization. There are two sides, debit side and the credit side. So it is called as double entry system. The next is section B, define double entry. There are two persons as been defined. So one is Palmer, the first definition, and the second one is Batley boy. So the Palmer said that there are two type of fold which can be easily for calculating every transactions. Then according to Batley boy, every business transactions has a twofold effect. The effect affects the two accounts in the opposite directions. So one must be a debit and the another one must be a credit one. Then what are the principles of double entry system? Every transactions there are two aspects. The two aspects means the receiving aspect and the giving aspect. The two aspects involve minimum two accounts, debit and credit. So for every debit, there is a corresponding and equivalent amount must be credited. So these are the principles of double entry system. Then next we are going, what are the advantages of double entry system? First one is accuracy. Accuracy means, so each transactions there are recorded in the two aspects, the debit aspect and the credit aspect. Then the second one is ascertainment of the business result, easily calculation of the net profit or loss, and then comparative study, easily we can comparative with the last year profit and this year profit. Common acceptance, business records are maintained under this system. The transactions which are involved in money or money is worth. There are two type of transactions. Already I told you, one is the cash transaction, another one credit transaction. Then the cash transaction may be a bank transaction also. Cash deposited into bank, cash withdraw from bank, then cash deposited through CDM, the CDM machine, or through net banking system, RTGS and all. So these are all called as bank transactions. Okay, students. So today I have started with the introduction part and the source document, double entry system meaning, definition, principle, advantages. Okay, students. Thank you and good day. We'll continue in the next class.